Welcome back, everyone. This is the weekly performance report. Noticeable activities over the last week is I bought Nibius, I bought Coupang, I bought Caspi, and I bought New. And there's the ticker symbols if you want to see them. And I sold the Nibius, I sold the Coupang, and I sold OGI, Organigram. I've been wondering how to play a Russia-Ukraine conflict resolution. Over the last week, one thing led to another, and I was reading an SEC filing on ticker symbol CEE, Central and Eastern European Fund. In that filing, they mentioned how their shares of Yandex were back trading and how that increased their NAV. Yandex was halted a couple of years ago due to the Russian invasion. Earlier in the year, I heard about how they were getting rid of their Russian assets and were going to start trading again. I failed to follow along and I missed the relisting. Well, Yandex is now called Nibius Group, ticker symbol NBIS. They started trading again back in late October. I want to say October 21st. So, not this weekend, but last weekend, I read up on them and a few other names. And over the weekend, I was going to enter a position come Monday morning, this past Monday. Well, it just so happens that some news came out over the weekend and they popped up, like it was 8% Monday morning. As such, I wasn't comfortable entering a full-size position, so I entered a 1% teaser position, essentially, hoping that it would pull back and let me size up the trade. It did anything but that. It was up over 40% by the end of this week. Not only am I irritated with tiny 1% positions, but I'm also not comfortable holding parabolic moves. As such, I sold. Now, of course, this chart isn't parabolic, but it's a big move. And, quite honestly, this bad boy might run. I wouldn't be surprised if it runs to 60, but it's 1%. And as I'm getting ready to get into, I'm sick and tired of having 1% or these small little positions. So I was like, well, I'm not going to be able to size into this. And it's a little 1% position. So, and for other reasons I'm getting ready to highlight, I sold it. In other news, the South Korean president decided to try and enact martial law earlier in the week. Coupang, ticker symbol CPNG, opened that morning down 8%. I bought the dip and sold the rebound. I also sold OGI, Organigram. I thought about keeping it with the recent news of buying Motif, but I'm sick and tired of these little 1% positions. Starting now, I'm only buying things if I have enough conviction to make it at least a 3% position. 6 out of the 17 stocks I own are less than a 3% position for one reason or the other. Quite frankly, I'm getting tired of my low conviction tiny positions. Of course, my third largest position, Valeris, managed to give my entire portfolio a 1% haircut over the last 5 days by falling nearly 10%. And then St. Joe, which I didn't write in this, but St. Joe fell roughly 5%, and it's a 10% position, which is to say overall, between Valeris and St. Joe, 2 out of my 3 largest positions, it hit my entire portfolio due to the position size and drew my portfolio down 1.5%. So 2 names pulled my entire portfolio down 1.5%. So I was actually thinking I should be up roughly 2% for the week with how some names I own and or were trading were up. And then it makes sense that I ended the week up 0.93% because Valeris and Joe tried their best to take my portfolio to the wood chipper. Had Joe and Valeris just stayed flat, I'd be up 2.43%. But instead, Valeris and St. Joe did what they did, and I'm only up 0.93%. I'm also starting to get a bad feeling of a market correction, which is prompting me to want to be in more cash. I'm starting to get some December 2021 / late January 2018 vibes. It might be more of the latter than the former, in which case it means a 2-week 10% drawdown. Now, that's what happened in late January into early February, was roughly 2 weeks and 10% drawdown. But both of those marked interim tops. In the case of 2018, it marked a 2-week, or let's just say it marked a 2-week drawdown, let's say, and then late 21, the market peaked either, I think, January 1st of 2022, and then it didn't bottom out for, 6 to 9 months. So anywhere from 2 weeks to 9 months, and a 10% to a, 25%, 22% drawdown in 2022 for the S&P. So the common thread from those two seemingly disparate reference points is that I'm feeling like an interim top might be happening, which, well, I'll just keep reading. I don't have enough conviction in these feelings to do anything too radical, such as trimming all the positions, those 6 positions I own that are less than 3%. But I'm starting to get those kinds of feelings. So just putting that out there, which, it's kind of tough. It's like, will it? And what, right now I'm 4% cash, I believe. So yeah, 4% cash. By the end of the year, if all else being equal, and I just add more, another $50 for the next 3 to 4 weeks, I'll be at roughly 5.5%, 6% cash. So not enough to really take advantage of a big drawdown, but nonetheless, it's something. And I've been trying to trade and enter positions. Like there's things in my portfolio, I didn't write any of this, but there's things in my portfolio that I kind of don't care about. A lot of things I kind of don't care about. Like if you said I'd walk away for the next 5-10 years, like, I guess I like Grown Rogue, I like St. Joe. Valeris is a commodity cyclical play that I think's undervalued, and I think is a lull period and this and that, and it seemingly is like more funds are actually buying the dip, so the free float is getting smaller and smaller, which means it's easier and easier to jerk around the price, both to the upside but also to the downside. But nonetheless, Valeris isn't this like, I believe in it type, like Grown Rogue, St. Joe, sure. I got Elf here, I don't know, just rough numbers. Elf's trading at, they're growing revenues nicely, I don't know, 70%. I'm just making numbers up. Don't quote me on these things. Elf's, net income or earnings per share is 5-fold in the last few years, and then revenues growing, I don't know, 30, 50, 70%, depending on the quarter. And then you have things like the new position I entered. Oh, get it? New? Because it's new holdings. I didn't mean to do that. No pun intended. Anyway, new holdings, online bank in Brazil, Latin America, Mexico, Colombia, and growing revenue 70%, but they're both 30 times earnings. So they could keep growing like they're growing. And in some sense, they're not cheap, they're not expensive, they're doing well enough. It's a reasonable enough multiple for the growth they're experiencing. But on the same token, they could keep growing like they do, but we could get in a overall broad market drawdown, and then their PE multiple could get cut in half. They could do everything they said they were going to do, growing things, and then all that has to happen is the multiple gets cut in half, and it's the same price. It goes nowhere. So there, you could say there's a margin of safety to the downside, but I can't get super excited about things, even though Grown Rogue on a PE basis, a trailing 12-month PE basis, is, I don't know, 30, was it like 30 times or something like that? And then St. Joe's, I don't know, something, I haven't looked at it recently, like 20 times funds from operation, something like that. But I believe in them long term. And then some of these other names, it's just, they're either a tiny position, which, tiny positions can do well. Look at Like Kodiak Gas Service is a 2.59% position, and it's up 132%, which is to say, it's actually done quite well. It was with my portfolio growth, because I've owned Kodiak Gas Services for like a year and a half, I think. So I know it's a long-term hold, so it's at least a year. So back then the portfolio was smaller before more cash came in and names compounded and this and that. But even with all that said, it's less than a 3% position, up 132%. And then Kinross, it's 3.81% of my portfolio, but that's because it's up 111%, because as I wrote a few weeks back, I never got to size it how I wanted to, and I pretty much bottom ticked the gold mining market, so I never got to size it up, and I actually chased higher into the fours and I think even low fives to top off my position. High Tide, got some faith in that. Genius Sports, it's funny, like I don't give a shit about it, and yet it's almost 7% of my portfolio, up 86% of that. Really don't care about it though. The uranium thing is like, yeah, okay. In some sense, I've become despondent because of it's pretty much done nothing all year long, but okay, fine. Still bullish that. And it's like ELF. That's 7% of my portfolio, and I'm like, okay, sure. I mean, so in some sense, I'm overstretching myself by buying the Genius Sports. That was me trying to size something up that I think might grow, but I don't really care too much about. And it's worked out well enough so far, up 86% on it. And then ELF worked out well enough so far, up 20% on it. And I've owned Genius for half a year, I'd say, something like that. And then I've owned ELF for a few weeks. And then Caspi, it's like, well, it gets that emerging market / Eastern European discount, not to mention the short report that kind of brought it down, and it hasn't really bounced too hard from when it got pulled down from that short report. So it's like, well, see what's going on with that. I'm not too excited about it. It's 2.77% position, and then just on and on. It's like I could easily sell 40% of my portfolio and not miss the names, so to speak. But then the question becomes, and this is for people who want to manage things on a short time frame and a long time frame or a midterm time frame. It's like, okay, 40% cash in my portfolio would have ultimately just wrecked my performance for the year. Especially once you factor in, then Valeris would be a disproportionate size of my portfolio. I mean, it'd be even worse. I'm down 30% on Valeris. And then, so, I mean, I could be in 40% cash, especially with how I'm feeling about the market kind of peaking, even though Trump's coming in and it's pump time and cut the interest rates and overheat the economy. Why not? But it's like, boy, I'm just not comfortable with the market right now. And I'm trying my best to participate to the upside, but that means I'm going to be participating to the downside if there is a downside. But yet again, if it's only a little blip, few week pullback, hits my portfolio really hard because market pulls down 10, I'll probably be down 15 or 20%, that is. And then it's like, well, if I really think there's going to do that, why would I buy the Braskem back, as I call it, ticker symbol BAK? And then I was up on it till I think Friday, and then it pulled back 5-6%, and so now I'm down 4%. And it's like, well, I'm not a macro economist, and I guess what all this rambling is saying that I'm buying things, like I bought ELF because I was like, if you're going to buy it, this seems like a good entry point. So I did. I sized it the way I did, 7% or 6, almost 7%. And I did that because I'm trying to get some late year gains, essentially. But by being short-term focused like that, even though I think it's a decent long-term hold, at least for now, till some news develops or something, but by exposing myself to it to get upside potential to close the year out, maybe narrow the spread a little bit to the S&P, I'm also exposing myself to the downside. But it's one of those things, if I was strictly a portfolio manager, like how many people are, then like all I care about is trying to narrow that spread by year end so that way I don't get redeemed. And I also know that I'm doing things on a rolling 3 month year. I've given up on the year. I mean, if I somehow beat the S&P, it's mind blowing because the S&P would essentially either have to fall like 15% while my portfolio doesn't fall at all, or my portfolio would have to rip like hardcore. And the only thing that would work is if Valeris just ripped to the upside, if and Grown Rogue. If Valeris and Grown Rogue just ripped, which there's like, what's the catalyst? Earnings are out of the way. It's in a year. Like I don't see it happening. So I've kind of given up on the year, but nonetheless, I kind of like to position myself in some way, and I'm building cash at the moment. So there's one other stock I was looking at. It's not where I want to buy it at, so I'm not. The whole Caspi thing, that really rubs me the wrong way. I completely missed that. I had a month and a half to get into that name to recognize it, and I missed it. And when I finally realized my mistake, I'm like, fine, I'll just have to buy higher, is what it is. But then it popped that 8%, and I was like, I can't do this. So I hit that little 1% position, and then it ran 40% in a week, and I was like, yeah, I'm out. So with that said, thank you for watching. Until next time.